Good morning, UPBOptionMillionaires.com. Real quick here on this Monday, December 17, 2018. Look at the market. We're down over a 0.25% here on S&P 500 futures, almost down to the lows that we saw just after the market closed on Friday. We broke through that 2,600 level, and Friday's kind of mirroring what we've seen really since the market started pulling back just a couple months ago. Something that we saw back at the start of 2016. If anyone can remember that, the selling started at the end of 2015. The last two trading days, I believe, and then the selling picked up as 2016 started. And, you heard a lot of calls that the market now was done. The bull market was over in 2016. And it turned out that the weakness that headed into February of that year marked a low, and we rallied something like 23 of the next 24 months for the market. If you look here for the S&P 500 futures, looking back to Friday, we had a nice spike to start the day. Look at this. And it sold off, so sell the rip, and something that we saw really in 2016 at the start of the year when the market was pulling back. We saw the sell the rip. It's the opposite of what we used to see, the buy the dip. The market would dip to start the day. About an hour into the session, we would recover those losses and then continue to rally throughout the session. We're seeing the opposite, so distribution, which is a selling, and the market's been pulling back really for the last couple months, led by small cap. So if you pull up a chart for the Russell 2000, you can see the action that we saw again. A nice little spike to start the day, and then the sell-off accelerates. Just a steady onslaught of selling throughout the trading day after that morning rip. If you pull up a chart for the Russell, and you want to look for, the market, Russell was first atop, first of all, and if you want to look for something that's leading the market, it's the small caps here, the Russell. So if you want to look for a possible reversal, get bullish this market, we want to see the Russell start to turn around, and right now it's actually breaking through support. You want to look at the same kind of similar topping pattern that we're seeing possibly for the NASDAQ and the S&P 500, Dow Jones Industrial Average. You're seeing it here already breaking through for small caps. That 1,400 level sets us up here for a move to 1,350, which is the channel that we saw. This is the election move. Remember, Donald Trump was elected. Small caps were actually the first to turn it around back in November of 2016. Do you remember the Friday before the election, heading into that election week, we were down something like 9 straight trading days for the S&P 500. Well, small caps were the first to turn it around. We had a massive rally. I believe we rallied something like 14 consecutive trading days, pulled back a little bit, and then another like 8 or 9 consecutive trading days. So the next real big support line would be this channel here from the election move. We are broken through the top side of it, and that would set us up to 1,350, and then obviously a lot of downside here if you look from a long-term perspective for, say, and this is the financials. Another indicator possibly this top for this market would be financials, which is a clear break here for XLF, and leading the way Goldman Sachs, which is out this morning, getting sued from, those headlines that we saw just a couple weeks ago, a criminal investigation. Not good news. And one of the financials kind of hanging up, but breaking through support here, JP Morgan Chase, which looked like a nice bull flag just a couple weeks ago. Pretty nasty move to the downside, setting us up for a move possibly to the high 80s for JP Morgan Chase. So financials are breaking down. Energy also at a turning point here. All these turning points have worked well. Could we see a possible move back? Again, look, 2016, remember energy pulling back here to start the year in 2016, pretty weak. And so finally, as we cut it short because the market's going to open in about an hour, so I got to get ready for that. But if you look here, the small caps, this 140 level, which is pretty much where we are here this morning, could act as support. Maybe things will turn around. It took me a while back in 2009 to get bearish on the market. The central banks clearly were hell-bent on inflating asset prices, and they've done that. Now, amid all of the headwinds that we've had so many headwinds since the lows of March 2009. Each of those headwinds have been an opportunity to buy the dip. Now we're seeing sell the rip, a pretty significant sell-off with small caps leading the way. And in the midst of an interest rate hike cycle for the central banks, they're taking away the punch bowl, the stimulus. So not only are there a lot of negative reasons to be long the market, or a lot of negative headlines that normally have been buy the dip headlines, but we're getting more importantly central banks pulling back on the baby bottle, taking off the training wheels. Whatever kind of statement you want to make as far as the central banks pulling away stimulus, and I think the markets doesn't like it clearly. And again, in a market that's accumulated record corporate debt, we have corporations with more debt than ever before in recorded history. And so now you look at these corporations amid a world of higher interest rates. How are they going to maintain this debt? And not only that, interest expenses will start to rise, and that's going to affect profits. So, You know, and also with higher interest rates, these corporations like Domino's Pizza has been buying back debt, issuing debt to fund their share repurchase program and issue special dividends. And they've been refinancing their debt. And I've gone over Domino's Pizza many, many times in the past. So a stock like this, amid a higher interest rate environment, could see significant downside. And lastly, you know, you want to look at a chart that's kind of symbolic of what we've seen since we hit our highs back a couple months ago. Look at Apple. I mean, what a dynamic move to the downside for Apple. And if you look at Apple, each of the moves it's had to the downside have been, you know, a modest pullback, modest pull. Look at the move we've had. Now, clearly the market got ahead of itself, but is this marking really a turning point for the market? Is this a blow-off type top that we're seeing with Apple? So clearly, there are signs this market may have seen the top. I'm not completely sold yet, and I've said it for a long time. If you look at the S&P 500 ETF, the spiders, I mean, look where we are now. Could this be a head and shoulders topping pattern? Indeed, it could. But if we do ultimately top here, and here's the top of the market, we've got a lot of time to trade for the downside. It's not going to be, you know, $100 candle to the downside for the SPY. So, and then clearly, this market's not going to give it up easy. So we're watching, you know, we're at a key juncture here in the market. Federal Reserve, you know, if they hold off on interest rates this week, that could be something that could push this market higher into the end of the year, possibly mark a bottom for the market, dare I say it. And if this market breaks through support, the Federal Reserve hikes rates, still hawkish here a little bit, that could send the market to a really nice buyable bottom in the first couple months of 2019. All right, UPBOptionmillionaires.com. We'll see you in the chat room.